What's going on YouTube? Welcome back to the channel. In today's video, I'm going to be giving you my futures game plan for the first week of January. So make sure you like, comment, share, subscribe, and let's get into it. Now, before we even get into this video, guys, we are never trying to predict the market. We only react to the market. So never watch these videos or any videos on this channel and think I'm just predicting what the market is going to happen. We are reacting to what the market gives us using if and then statements that you guys will see me use once we head over to the charts. And that's going to be the most important thing. It's about what the markets do at these key levels, not just blindly trading in any direction in the market just because you guys are seeing coach say that this play is looking good or that play is looking good. So use all these plays with discretion. The market gives that confirmation, I'll take the trade, but I personally stay out of any setups I don't like if that confirmation in my bias is incorrect, or I'll take that small loss and move into the next session. So for myself, I'm usually trading the Asia session from 7 p.m. to 9 p.m. That's mainly when I'm going to be looking at the markets. But my very first question before placing any trade is, what is the market conditions and what are the fundamentals telling me for the week? So let's jump into that first. All right, team. So this is the site I use for fundamentals, forexfactory.com, to see what type of news is coming out during the week. Are there any announcements that came out over the weekend that I need to look into? So you can see here it says news and hot story. Trump says if Iran shoots and violently kills protesters, the U.S. will come to their rescue. Now, just a rule of thumb, if Trump is speaking about anything that has to do with warring or anything like that, we typically see gold prices rise. Now, it doesn't have to happen this week, but that's just something to keep in mind and something on my checklist that I'm looking at. So I already see things are heating up over the weekend. This will show us any news events, particularly for USD, since we're trading gold futures, oil futures, NASDAQ, S&P futures. All of those are going to have a bigger reaction to red folder news, particularly for USD. So I go through this site and scan each day to see what red folder news is coming out. Now, Monday, we can see we have 10 a.m. ISM manufacturing news. So we definitely will see more volatility pick up around 10 a.m. during the New York session. I don't always trade New York. Like I said, I'm mainly trading the Asia session, but this is already telling me, based off this volatility that happens with this news event, that may set us up for what we'll be looking for on the Asia stream. Tuesday, we can see we have no red folder news here. Wednesday, we got the JOLTS job openings and the ISM services PMI. Thursday, we have unemployment claims. You'll always see unemployment claims come out. So this is, again, how we navigate trading the New York session. So how I usually tell my traders on the team that do trade New York session when I give my daily analysis is just, one, what am I looking for? And then what are the news that I'm trying to avoid? So I wouldn't be trading ahead if I'm trading New York session of an 8:30 a.m. news event. If I don't trade Asia session, I would have to wait until after 8:30 once that news gets released, and then see how the market is set up for potential plays to take advantage of. Now, lastly, we got the average hourly earnings month over month, non-farm employment change, and the unemployment rate. And at 10 a.m., we got the prelim consumer sentiment and prelim inflation expectations. So what this means, family, this is NFP week or non-farm payrolls. Now, this is one of them weeks in the market you want to be super careful with your capital. This is where we'll see more of the setups we generally take, not hold, more break evens. Sometimes you have a great NFP week, but NFP week, we will see a lot more sporadic movement in the market. So that's what you got to be prepared for. If you're not taking advantage of these free sites like Forex Factory, how are you going to know when it's NFP, when it's FOMC? Those are the times you want to try to either avoid the market or scale back with your position sizing. So let's jump over to the charts. So let's start here on the charts here on gold. Let's start with the weekly time frame. Now, based off the weekly time frame, as you guys can see, we did have a strong bearish engulfing form here, but the market has not closed below any lows just yet, or we didn't have any inversions just yet. Team knows when we get those inversions or those breaks, especially on a higher time frame like a weekly, that's when we'll really see that shift to go bearish. If you look here on gold, we have not seen a bearish shift in quite some time where we actually closed below the low and got continuation. This was our last closure back in April when we had a sell-off. As soon as price broke a short-term low, we bounced right back. So overall, higher time frame bias is, still bullish based off that weekly. But when we drop down to that daily time frame, we can clearly see a shift here. We have sell side fair value gap. We have run of lows, sell side continuation. So market definitely looking pretty bearish here. We go to the 8-hour time frame and see the same thing. Sell side coming in, but we are starting to move sideways. Now we can see we are basically in the middle of the range created from December. So sitting at 50% of that range. So with us sitting in the middle of last month's price action range, we really want to be careful here, because what you'll notice is when we create a range, we typically consolidate around the middle of it. So with this monthly range, you can see even here to the left, we had consolidation here. We're at that same area we were at, and we're still consolidating. Now, with us running out a weekly level, what I want to see if we can hold on this sell side. I'll be looking for sell side continuation, and then we can look to target the actual, we can target the lows created from December 8th all the way down to 4,200, where we had the actual low of that monthly in December. We just talked about what Trump said, and potentially warring with protesters and stuff like that. So if, let's say, something was to happen in the market, shook up, and we flip back bullish, going back with that weekly time frame or overall bias, and we start to see these highs get broken, we're going to be looking for shifts to take us back to the upside to fill in this imbalance created from this drop here last week, and then potentially breach the all-time highs or the monthly highs here in December. Now, of course, this doesn't have to happen this week. I would be expecting more of a bigger movement with NFP, but we'll have to see what happens. So that's what I'm looking at for gold. As far as oil, let's start on the weekly time frame on oil. Weekly time frame, we can see price action has been maintaining on that sell side, breaking lows here, and prices just kind of been struggling to get back above any highs. We've just been maintaining. We've been running lows, continuing to trade lower. If we go down to that daily time frame, get more information from this past recent sell-off, we did end up bouncing back, formed a buy side imbalance here on that daily time frame. The market pulled back. Now we're just kind of slowing down here. If we look at the 8-hour, 8 hours telling us with that last push up, we did kind of reverse that here last week, or we did reverse that the week prior, and we can see we formed sell side imbalance that maintained price and sent prices back lower. So if we are still maintaining on this sell side here this week, I am looking for oil to retest back around $55. Now, again, if the fundamentals shift the market back up, I will want to start to see these highs broken. I'm looking to take the market back up to December's high around $60.50. Now let's jump into NQ, and we'll look at ES as well to finish off this video. So based off this weekly time frame here again, now we can see weekly time frame, we did make that impulse go up with that bullish move. We had a retrace. This was basically heading into November, had a strong sell-off, and then we bounced back to the upside. So with price action bouncing back to the upside the way we have, I do want to see how do buyers want to hold and maintain, because we see the same thing on gold where we have a shift going up, but then we end up seeing prices pull back here with a strong bearish engulfing. So just because the weekly time frame may be bullish, but does not mean that the lower time frames are adjusted, so we still flow with the intraday bias. So if we look at this daily time frame here, we can see we have again our high and our low from December. We basically had a sell-off come in mid-December. We had that rally take us up, we took out highs, and then we end up rejecting back from that high of the range. As you guys can see on the 8-hour time frame, we have ran out multiple lows here, been maintaining. Last week we initially got a push up here. This was on Friday. Was looking to see will we get buy side continuation. Market said nope, continue with that sell-off, and we broke more lows here to the downside. So with us having that strong bearish engulfing coming in, I would like to see again on NQ more sell side this week if we can hold and maintain. And of course, our overall target, our bias is those monthly lows from December, taking us back around $24,887 roughly. Now, if let's say we end up forming this imbalance or the market starts to break above highs here, then we could start to look for that continuation rate back up. It's just all depending on what the market does. If it doesn't give us that sell side reaction, we're not going to chase sales, especially because those higher time frames like that weekly is still pointing towards potential buy side. So we want to determine on the lower time frames or on our lower macro time frames like the 8-hour, are we seeing a shift for a reversal on that weekly and daily time frame, or are we potentially just in that continuation? So right now, with that weekly being bullish, I'm trying to flow with the sell side, which would be more of a reversal based off the weekly. And then if it started to shift on the weekly, then we really should start seeing some strong sales here in 2026. But if we don't and the market flows right back up, we'll flow right with it. All right, so lastly, we'll look at ES. ES is going to be pretty much the same here, guys. We can see weekly time frame still been moving to the upside. We just had a stronger pullback last week, so we'll see how prices hold and maintain there. If we drop down to our daily time frame, we can see on the daily, basically we're trapped within the middle of this range here again. We made our way up to that high last week, and then we started to see more of a sell-off. 8-hour time frame. As we break this down more, running out lows, creating sell side fair value gaps or imbalances, and continuing down lower. And last week we closed this last 8-hour candle with a strong bearish engulfing candle. So market's still looking really bearish here. Like I said, guys, looking to aim towards for ES back around $6,770 roughly if we can continue the sell off. We can see we did form a wick rejection on the bottom side of this candle, so we'll just have to see what happens, because if the market comes in now that we swept out that weekly low and we get more buy side, we flow right back with the opposite direction. All right, so there you have it, team. We got the outlook for the first week of January. I hope you guys are tapping in, marking up your charts with me. If you guys are excited to make some money in the first week of January, let me know in the comments. Now, keep in mind, before we close out this video, you want to go in this week with fixed risk. Do not risk more than what you set up per trade. So whether you're trading a prop firm or your personal account, you should already know how much risk you're going to go in before every single trade. For myself personally, I'm only taking 1 to 2 trades per day. That's all I need. If those 2 shots are not working, I'm gonna go ahead and step back. NFP can be tough. Like I said, you will have the setups that would generally work, but the market just being the market during NFP week with all the news and fundamentals kind of shakes up the setups and how the market generally aligns. So make sure you look out for that. Now, the only thing that will make me walk away from trading this week is if we more so consolidate in a range where we just get order flow breaking back and forth. So we talked about in our video today, a lot of our pairs being kind of aimed to the downside. If let's say we start the week on Sunday, as soon as the market opens up, it flips bullish, then we get the next following day to flip bearish, and then by Wednesday we didn't flip bullish and bearish back and forth. I'm going to stay out of the market. I'll come back, Monday following week. The main thing is this: I don't need to know where the market is going. I don't need to predict the market. I just need to show up and be ready when the market produces a clean setup. So with that being said, I hope you guys have an amazing, profitable week. For my people on the team, we locked in. We'll be trading live all week. I will see you guys in the community. As always, invest in yourself, and I'll see you guys in the next video.